Hi students, I want to help you navigate the My Accounting Lab problem homework type assignments. So here is one that is similar to 1A, exercise 1A5, has to do with the preparation of the three financial statements, which are of course illustrated in the textbook among your other resources. So what you do here is to get the data, you just click on that. Now, the accounts that you see here are the ending balances of the accounts. For example, those would be the balances at the bottom of the spreadsheet equation after having recorded all of the transactions during the particular time period. And of course, the job of the accountant, the first part is of accountancy, is to get transactions recorded into a ledger, and you're using the equation, but record the transactions in the ledger, and then at the end of the month take the account balances and put them into meaningful form in order to provide the user of the financial statements with updated information, financial information that will help them make judgments and decisions about the company. So let's go. So again, make sure you click on that to get your data up there. And again, any financial statements particularly starts with the name of the company. It's all set up for you. You tell everybody what the statement is. Typically, the income statement is prepared first, and this is for a time period. Income statements are prepared for a specific time period. You just can't plop the date in there. You got to tell everybody it's for the month ended, so they'll know this is the performance of the activities for the month of September. Okay, so I guess we're prompted to check our answer at that point. We did that correct. Now we'll probably have to enter the accounts that belong on the income statement. Now that we have the title, the first thing that on an income statement would be the revenue, and the revenue account is referred to as professional fees. So I bet you'll see that here as a selection. So select professional fees and enter the amount, which is $3,700. I'll do it for you, and it'll hopefully make it easier for you to solve the similar problems in the book. Now, following the revenues are the operating expenses. The formula for the income statement are the revenues minus the expenses, so that we have to list our operating expenses, and any account that has the last name, so to speak, of expense is an expense. So that we paid $300 in salaries and $400 to the utility, gas and electric, National Grid, whoever, and the rent landlord got $400. So that we can take them just as they are right here. Salaries, expense, we can list first. So we'll pop that in, and the amount is probably can copy and paste, huh? Let's see. Oh, careful. Don't waste much time. Yeah, copy it and paste it. You don't have to do that. Copy to clipboard. Now it's not going to work that way, so let's just quickly get that in for $300. Okay, and then after that is utilities expense. You just click that field. You'll see the utilities, select it. It presents itself, list the amount, $400. Okay, and then the same thing for rent, which is the next one. Just kind of scroll down with your mouse or whatever. And what did we say? Utilities. Oh, we already got the utilities. We want to put the rent in. So we'll come up here, put the rent in for $400. So that's done. And this will probably ask you maybe for the total expenses. Let's see. Not there, but perhaps over here. There you go. Total operating expenses. 4 4s 8 3s 1100. And there's no unfortunately there's no automatic like Excel, there's no automatic addition and subtraction here, but that's okay. They're fairly easy numbers. So your revenues minus your expenses, I can do that, I think, in my head, would be what, $2,600? And if you needed to use, for example, a calculator for anything, it's right here. Question help. Click on calculator. If you want to go to the book to see what pages it's on, there are some video backups. Okay. So here's your calculator. If you wanted to use that, of course, this is easy, but nonetheless, you can use your mouse or type right into your keyboard on your laptop or your cell phone or whatever you're using. So it certainly would be 3,700 minus, where's that, over here, 1,100, and again, you can do this in your head, and then hit your equals button, and you pop in 2,600, and that would be the net income. So you have to make sure you identify it as such over here. So click on that, and your income statement is done. And again, the income statement formula is letter R, minus letter E. R minus E. Revenue minus expenses equals net income. So we're profitable. We made some money. We made $2,600, and we had a profitable month. And we'll be able to compare that to next month, last month, and months going forward to evaluate our performance over a period of time. Let me pause. Okay, let's just check the answer to make sure we're good. And then they're going to prompt us, so we're okay there. The next financial statement that's illustrated all over your resources would be to prepare a statement of owner's equity. So you'll see that they will prompt you, part B of the exercise. And once again, you got to tell everybody who you are, what the statement is, statement of owner's equity, and what happened to the equity of the owner for the month of September. So we'll check to make sure we've got the heading right. All right, and then we're going to get again, to get your data table from, okay, always click on that icon. So when you see September 1st, obviously that's the beginning. So we're going to go from beginning to end. We started with an equity of, there it is right there. Okay, so always use your beginning balance to start an equity statement, and then we'll proceed to calculate the ending balance with a couple of operations. 8795. So we'll get that in 8795. Now, what happened during the month? Well, was one thing that we know is that we had a $2,600 income. Okay, so from the income statement, you're going to pick up that $2,600, and then we had withdrawals during the period, so the owner took out personal money of $175. So that's going to reduce the equity by $175. So while the owner earned 26 in profit to increase his equity, that 26 is reduced by the 175. So it'd be 26 minus 2 would be 24 plus 25. Okay, 24.25. That would be an increase in capital. Again, he started with 87.95, up by 26, but down by 175. Again, I told you a second ago that was what, 26 minus 2, 24 plus 25, 24.25. So that should be the number, unless I made a head mistake there. 24.25 is the excess of 26 over the 175. So that we'll do the math, and then what happens is that we enter the ending balance which is going to be the difference between the beginning balance minus the increase, plus the increase in capital for the period. So that we have to simply add 5 5's 10, right? 1 9 10 2's 12. All right, so let me just hold on a sec. So we'll just grab the calculator. 87879 minus, I keep doing that, plus, okay, addition to owner's equity of 2425, and then he's up to 11,220. So you can just enter that amount in the total column, 11,220, and that would be his ending capital balance. Let me get the calculator out of the way here. And what did I should be okay, right? So they're not asking me to check. Okay, so we check our answer. Oh, what did I do? I labeled something wrong. Okay, statement labels are incorrect. All right, I screwed something up. Bad boy, I forgot to label that. All right, withdrawals. Okay, I should be good now. Check answer, yeah. All right, now they're going to prompt me to do the balance sheet. So you can see that the order of doing the financials is to do the income statement first, the equity statement second, and thirdly, the balance sheet. And again, this is a picture of the company's assets, liabilities, and equity, like a snapshot at September 30th. All right, so once we get the label on the statements, we proceed to get our data table. Again, these are the ending ledger account balances, and we're going to need, you see this 1120, 220 here? That's the figure we're going to use. Hold on. Okay, sorry about that. So we'll get out of here. We'll check the answer to make sure we got that heading right. Anytime you see that, you got to click it before you go on. So now the balance sheet is also known as a statement of financial condition or financial position. Where does the company stand financially in terms of what it has for resources, which are its assets? So you'll bring the chart of accounts down here with the all of the assets. You see the cash has $3,200 in it, and the accounts receivable. That the accounts receivable arise from the selling of your goods and services on account. It's money that you're going to get later, but you did perform the service, and the money is owed to you. So we call that an asset because it's a valuable thing that we have insofar that it is money owed to us. The other asset that I see here is the office equipment, so we'll click on that and drop the $9,900 in there. Okay, and there don't appear to be any other assets that I can see. So we add these three up, and I think it was 14,220. I don't know why they put that line there, and this is blank. There's nothing to click on there. They've already typed in total assets. So I hope I did this right, but don't get messed up by seeing a line there thinking that you have to put something there, because there's really nothing to put there. Okay, so they've already got the label for that total, and I did add those three up, but let's just make sure that we got the asset side. Oh, I didn't do the whole balance sheet. Okay, so let me continue. I got to do the whole balance sheet. So that's the asset side. There's only one liability. They don't want to, they've got the heading up there for liabilities, and there's only one liability that I can see, and that would be the accounts payable account. That's when you buy goods and services, equipment, whatever. You buy now, pay later. and that's what makes a liability. And if it's not a note payable where like you sign a note when you borrow money, it's just an open line of credit that you may have, or a limited line of credit that you may have with a vendor. And when you buy from that vendor or vendors, you add to the amount that you owe to them individually, where the sum of all of the creditors would be, like over here, $3,000. Now, the owner's equity, of course, is something we already calculated, so we'll never use the beginning balance. We have to use the ending balance. So in order to get that Fantino capital, you just did the equity statement, so you're going to pick up, remember that? You're going to pick up that ending capital balance of 11,220, and you're going to pop that in over here, Fantino capital, okay, 11,220. And if I didn't goof anything up, all I have to do is add, and it looks pretty good to me. It's assets equals liabilities plus owner's equity. It looks like 14,220 to me. Or just a heads up, if you never had that 11,220 or couldn't find it, you take your chances that you always get it to plug 14,220. Remember the equation. You can play with it. So 14,220 minus the 3,000, A minus L, assets minus liabilities, will always plug you the owner's equity. But it's preferable to grab it from a calculation. Unless you don't have it. That's the way to get it, is by subtraction. Okay, I hope that we did that correctly. Remember, the balance sheet is a statement of financial condition. How do I move that over? Show answer. Okay, what the heck? I don't know what Okay, but anyway, there it is. Okay, I just had to get rid of that. So there you are. A statement of financial condition shows the amount of resources that the company has and the equity to those resources. As you can see, the owner has the lion's share of the equity. 11,220 is the owner's claim. The other 3,000 is the creditor's claim. And I also should say that they are also very liquid in terms of their ability to pay. They've got immediate cash that exceeds their debt, which will probably be due in 30 days. Plus, they're still working, earning money, I hope. But on top of that, the accounts receivable should be flowing in as collections. So they're in good liquidity shape as far as I see it. And that's what we use the balance sheet for. Okay, this should help you very much. I hope you read it and reread it and listen to it. I know it's a little long, but it's up to you. Take it. Don't leave it.